Welcome back, everyone. Today we're going deep on arbitrage trading. It's been all over the news lately, especially with those AI trading bots making headlines.
It's definitely a hot topic. Lots of buzz out there.
You bet. You sent over a really interesting mix of sources for this one.
Yeah.
Articles, explanations, even a bit from a podcast script, all about AI and how arbitrage works.
I figured we should cover all the bases, right? Get a good overall picture.
Absolutely. That's the whole point of these deep dives. So let's get right into it. The big question everyone seems to have: can you really profit from these price differences?
Right. That's the heart of arbitrage, isn't it? Sounds almost too good to be true, doesn't it?
It really does, almost like free money. But we all know it can't be that simple. So let's break it all down. How does arbitrage actually work?
Well, the Inclustrat text had this Bitcoin example, made it sound pretty straightforward.
Oh, what was that?
So imagine Bitcoin's trading at, say, $30,000 on one exchange,
Okay.
and then boom, it's at $30,200 on another exchange.
Right.
An arbitrage trader would jump on that, buy low, sell high, make a quick $200 profit.
Okay, so just like that, buy here, sell there, profit.
In theory, yeah, but it's definitely not always that easy.
I figured as much. I mean, Bitcoin's just one example, right? What about other assets?
Exactly. Arbitrage isn't limited to crypto.
Okay,
We're talking stocks, commodities, currencies.
so anything traded on multiple markets, basically.
You got it. Anywhere there's a price difference, there's a potential opportunity. But
There's always a but, isn't there?
those price differences, they don't stick around for long.
Especially with markets moving so fast these days.
Exactly. Speed is key in arbitrage. Precision, too. You got to execute trades almost simultaneously, or that profit window slams shut.
So it's less about casual browsing, more like, I don't know, a high-speed chase.
Yeah, I think stock exchange, trading floor, that kind of intensity. And, there's actually a bunch of different types of arbitrage out there.
Oh, really? So it's not just one basic strategy?
Nope, not at all. The Arbitrage Explained source breaks it down, all these different types, spatial, triangular.
Wow, so there's like a whole world of arbitrage going on, different strategies for different assets.
Right. Shows how diverse this strategy can be. But there's one type I think is particularly interesting, especially for AI trading: statistical arbitrage.
Okay, statistical arbitrage. What's that all about?
It uses complex math models to predict price movements, those short-term blips. And that's where AI shines. Those algorithms can sift through tons of data, spot opportunities humans wouldn't even see.
So it's like AI is taking arbitrage to the next level, finding those tiny hidden opportunities.
Exactly. But even with all the speed in AI, people still get drawn to arbitrage for some basic advantages.
Right, there has to be something driving all this interest. Even before the AI craze, what makes arbitrage so attractive?
Well, first off, low risk. The Inclustrat text talked about this. You're locking in your profit right when you trade.
Hmm, interesting.
You're not betting on whether prices go up or down later. You're just exploiting the difference that's already there.
More calculated, less gamble. I get it. Makes sense.
And while the profit on a single trade might be small, if you do enough trades, that adds up. Potential for consistent returns.
Oh, yeah. Consistency is the holy grail in finance, isn't it? I'd take steady returns over risky bets any day.
Absolutely. And then there's market neutrality.
Market neutrality, what's that all about?
It basically means your strategy works whether the overall market is up or down.
Oh, interesting. So it's not like riding the waves of a bull market, hoping for the best.
Nope, you're profiting from the difference, not the overall trend. More stability, even when things are volatile.
Okay, so it's low risk, consistent, and it works in any market condition.
Hmm.
No wonder people are intrigued. But there's got to be a catch, right?
There's always a catch. And the Inclustrat text didn't shy away from that, outlined a bunch of challenges.
All right, let's hear it. What are we up against?
Well, for one, the competition is fierce, especially now with these AI bots.
Oh, yeah, those bots. They're everywhere these days.
They can spot and exploit these price differences in milliseconds. It's a constant arms race to be faster and smarter.
So it's not enough to just see the opportunity. You have to be the first to grab it. And what about all this high-speed trading? Doesn't that get expensive?
It can, yeah. That's another challenge: slim margins. Each individual trade might only bring in a small profit.
So you need a lot of capital to make it worthwhile. This isn't for someone with a few $100 to spare.
Definitely not. And then on top of that, you've got transaction costs, fees for trading, transferring money, all that eats into your profits.
Ouch. Yeah, fees are a killer.
And there's always the risk of something going wrong during execution.
Oh, execution risk. What do you mean?
Even with super fast bots, there can be delays. A tiny lag in executing your trade, and that profit can vanish.
So it's all about speed, precision, and a bit of luck too, I guess.
You could say that. And then there's the regulatory hurdles. Different markets have different rules. Makes things complicated.
Ah, regulations, the ever-present challenge. So not exactly a walk in the park then. But okay, let's talk more about these AI trading bots. They seem to be at the heart of it all.
They really are. And the AI-driven trading bots source dives deep into how they're changing the game.
What's the biggest advantage bots have over us mere mortals?
Well, speed, obviously. They can scan markets and execute trades way faster than any human.
Yeah, we can't compete with that kind of processing power.
Mhm.
But is it just about speed?
Nope. They're also incredibly precise, minimizing errors in calculations, which, means more profit.
So they're like these hyper-efficient trading machines, always on, always looking for the next opportunity.
Precisely. 24/7 operation, never miss a chance, especially in the crypto markets where things are constantly changing.
No sleep for the bots. What else makes them so powerful?
Scalability. They can handle multiple trades simultaneously, way more efficiently than a human could.
Multitasking masters.
And maybe most importantly, they're emotionless.
Ah, right. No fear, no greed clouding their judgment.
Exactly. Just pure data and algorithms driving their decisions.
Sounds impressive, but a little unsettling too, you know? Like, are we becoming obsolete?
That's a whole other discussion. But for now, let's bring it back to reality.
Okay, good point. We've talked a lot about theory. What about some real-world examples? How does all this play out in practice?
Well, the AI-driven trading bots source had a great example, used Royal Dutch Shell shares.
Shell, the oil company. What do they have to do with arbitrage?
Shell's listed on two different stock exchanges, the NYSE in New York and the LSE in London.
Okay.
And because of time zone differences in currency exchange rates, there can be price discrepancies between the two listings.
Interesting.
A bot could spot that, buy on the cheaper exchange, and sell on the more expensive one.
Ah, I see. So even something as simple as different time zones can create a profit opportunity. What about the big players, though? The hedge funds, are they using this stuff too?
Oh yeah, big time. The quad code source touched on that. Hedge funds like Renaissance Technologies, they're using really sophisticated algorithms for arbitrage.
Renaissance technologies, aren't they super secretive?
Yeah, notoriously so. But they're basically using AI to find these tiny fleeting opportunities way beyond what humans could do.
It's like they're playing a different game altogether.
Yeah.
But with all this high-frequency trading and these powerful algorithms, it all feels kind of, I don't know, is it even legal?
It's a good question, and the sources address that directly.
Okay, well, let's clear that up. Is arbitrage itself legal?
Generally, yes. It actually helps make the markets more efficient.
More efficient? How so?
It keeps prices in line across different markets.
Ah, so it's not some shady backroom deal. It's actually a legitimate part of the financial system.
Right. But the Quad Code article does point out that the lines can get blurry. Things like insider trading, using non-public information to profit, that's obviously illegal.
Okay, so there are limits. Makes sense. Anything else our listeners should know about the legal side?
Well, each country has its own regulations, and they can change fast. Makes it tricky to stay on the right side of the law.
So it's not a set it and forget it situation. You have to be on top of things constantly. And what about brokers? What's their role in all of this?
The Quad Code article talks about that too.
Yeah.
Brokers generally allow arbitrage, but they have rules.
Oh, yeah. I bet they do. Can't have people running wild, right?
Exactly. It's a balancing act for them. They want to facilitate trading, but they also have to manage the risks.
Right. It's their business on the line, too. So we've covered a lot here, from the basics of what arbitrage is to the potential pitfalls and the role of AI.
We've only just scratched the surface.
I know, right? There's so much more to this. But that's all the time we have for this part of our arbitrage deep dive.
Thinking about all this, the mechanics of arbitrage, it really makes you wonder about the future of the markets themselves.
Oh, how so? What are you thinking about?
Well, with all these AI bots taking over, what happens to the humans?
Yeah, that's a good point. Like, are we just going to be obsolete?
Maybe, maybe not. But the Future Prospects article, it mentioned this UK government project. They're studying the impact of computer-assisted trading.
So governments are paying attention. Makes sense. This is a big deal. What are they finding?
Well, one thing is, trade sizes are getting smaller. And jobs, they're shifting away from human traders.
Wow. Yeah. Like a whole power shift happening, algorithms taking charge. It's kind of scary, honestly.
It is, yeah. And it's not just about speed anymore. The article talked about these bots that can read the news, like actually interpret it.
Hold on, they can read the news. and trade based on that.
Yeah, in real time, faster than any human could. It's like they're developing their own market sense.
That's wild,
hmm
but also kind of creepy. Like, how do we even control that?
That's the challenge, right? It's not just about making them smarter, it's about making them responsible.
Yeah, like we're handing over the keys to the kingdom. Got to make sure they don't wreck the place.
Exactly. But it doesn't have to be all doom and gloom. The article also mentioned these cyborg systems where humans and machines work together.
Oh, interesting. So more like a partnership, not a takeover.
Right. Combining the best of both worlds. And who knows, maybe AI will even get to the point where it can create arbitrage opportunities, not just exploit them.
Wait, what? Like manipulating the market? That sounds straight out of science fiction.
It's a possibility we have to consider. The more powerful these systems get, the more potential for both good and bad.
So it's all about responsible development, making sure we're steering this technology in the right direction.
Absolutely. But okay, enough with the future gazing. Let's get back to the here and now. We've talked about all these concepts, but can people actually make money with arbitrage?
Yeah, that's the million-dollar question, isn't it? Is this a realistic way to make a living?
The Quad Code article, it tackled that head on. And the answer is, it's complicated.
I figured as much. So what's the verdict? Can you make a living doing this?
It's possible, but it's not easy. You need expertise, experience, and a decent amount of capital to start.
So this isn't just a side hustle for someone with a few bucks to spare.
Definitely not. This is serious business.
Yeah.
You need to really understand the markets you're trading in, the trends, the liquidity, the timing, all of it.
So it's not just about having a fast internet connection and a fancy bot. You need to know what you're doing.
Exactly. And you got to be constantly learning and adapting, too. Things change fast in this world.
It's like a never-ending game of catch-up, always staying one step ahead. But even with the skills, there's still the money issue.
Right. And the article was pretty clear about that. You need substantial capital to make real returns.
Okay, so we're not talking small potatoes here.
Nope. And even then, there are no guarantees. The competition is fierce.
Oh, yeah, we talked about that. The hedge funds, the big institutions, they've got all the resources.
Exactly. And then there are the transaction costs. They can really eat into your profits.
Set by 1,000 cuts, right?
Yeah.
What else should people be wary of?
Liquidity is a big one. If the market's not liquid enough, you can't execute your trades efficiently.
So it's not just about finding the price difference. It's about finding it in the right place. What about the legal stuff? Any traps there?
Oh, tons. Regulations can change overnight, makes it really hard to plan ahead.
Like navigating a minefield. But the mines are moving.
And of course, you're completely reliant on technology, algorithms, trading platforms, data feeds. All that costs money.
So it's a huge investment, even before you make your first trade.
You could say that. Arbitrage, it's a delicate dance, risk, technology, competition. It's a lot to manage.
Sounds intense. And with AI constantly evolving, it's only going to get more complicated.
You bet. It's a fascinating field, though, really pushes the boundaries.
We've definitely learned a lot today, from the basics to the ethical dilemmas and the future of AI in trading.
And we're not done yet.
You're right. But that's all for this segment of our Arbitrage Deep Dive. It's funny, as we've been talking about arbitrage, I keep thinking about how a lot of these ideas, they apply to life in general, not just Wall Street.
Interesting. What do you mean?
Well, not arbitrage exactly, like the actual trading, but the whole concept of spotting differences in value and using them to your advantage.
Yeah, I see what you mean. Like, it's not just about prices, right? It's about information, opportunities.
Exactly. Like, take grocery shopping. The same product can be cheaper at one store than another. Or maybe one store has a better loyalty program.
Right.
By making smart choices, aren't we kind of doing a mini version of arbitrage?
In a way, yeah. You're optimizing your spending, getting the most bang for your buck.
So maybe we're all arbitragers in some sense, always trying to maximize our gains, whether it's money, career success, or just happiness.
I like that, an arbitrage mindset. Always looking for those little advantages.
And the more aware we are, the better decisions we can make. It's about seeing those opportunities that other people miss.
Absolutely. It all comes back to knowledge, awareness, being willing to think differently, just like we've been talking about this whole time.
Exactly. So one last question before we wrap up. We've talked a lot about AI, how it's changing the game. But what about us humans? What skills do we need to thrive in this new world?
That's the big question, isn't it? As AI gets more powerful, what's our edge?
Right. What makes us valuable?
I think it comes down to the things AI can't replicate easily. Creativity, critical thinking, adaptability. understanding human behavior, that kind of stuff.
So it's not just about keeping up with the machines, it's about developing the skills that make us uniquely human.
Yeah.
Almost like we have to evolve alongside the technology.
I think that's a great way to put it. And who knows, maybe the best arbitrageurs of the future, they won't be the ones who can code the best spots.
Oh, who will they be then?
They'll be the ones who understand the human element of the markets, the psychology, the emotions, all the messy stuff. AI hasn't quite figured out yet.
That's a really thought-provoking idea to end on. Well, we've certainly gone deep on arbitrage today. Explored the mechanics, the opportunities, the risks, even the ethical dilemmas.
And we even went beyond finance, looked at how these ideas show up in everyday life.
Exactly. It's been a fascinating journey. I hope our listeners have learned a lot, maybe even gained a new perspective or two.
Me too. It's been a pleasure diving into all this with you.
Likewise. And as always, remember, the world of finance never stands still. Keep learning, keep adapting, and stay ahead of the curve. Until next time, happy trading, everyone.